following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Anyway, we are back, and it's another beautiful and gorgeous day at TFNN, and me, your humble, lovable, and squeezably soft host, off for another day of commenting on the stock markets. And not much happening out here. I know a lot of people were expecting a lot. I was looking for a little bit more of a pullback today and then maybe a push-up tomorrow. And we got down to 2090. That may be all we're going to get for this week at 2099 on the S&P cash. Had some news out after the close last night, and that was was it 16 million barrels of crude for a draw for the private numbers from a company that does it. And of course, the EIA government numbers came out this morning. I think they were 7 or 8 million barrels for a draw. So got a little bit of pop out there. What do we got? Crude. It was off about $3. It's off for like 50 cents now, at 51.64. I think part of that has to do with people buying it as the fear trade going into the weekends now instead of gold. We've got gold that's up about a little over $8, but that really happened kind of last night. And really hasn't, we were a little bit higher, but really hasn't faded. Of course, gold bulls are taking any close above $1,200 now as a positive. I think there's probably more than enough evidence that we're probably going to be testing 1183, I think is what it is, on gold here in the next couple of days. That may be on Monday. There may be enough fear trade in gold left over for tomorrow. People hold on to it, but I'm probably expecting a little bit of selling coming in on Monday. And that test of 1183 is probably going to tell us a lot. Of course, we've been kind of bumping around these lower levels, the lower ranges. And when we look at the GLD, certainly telling us the same kind of thing. You are seeing a little bit better relative strength, though, in the miners, and that may tell you that we are getting closer, not farther away, for an eventual true bottom in the price of gold. At the same time, I could see us going sideways for a while, and I would actually like that. I want some energy to build up before I buy gold, because I suspect the next time we buy it, that will be the last time, and this will be the last fifth leg in the movement of gold, and that will be all she wrote. It may go on for a year or two, and then it will be over, just like it was over in the 80s. And in previous bull cycles in gold, we've had a pretty monstrous pullback from the almost $1,900 level in gold. And as I look at it and think about it, you know, $1,900 back down to 1180 or so, pretty huge pullback. And there's always the thought that, you know, that gold or commodities have V bottoms. And I don't think you can make that argument. If you look through enough of the commodities, a lot of them do go back to low levels for a very long time. And if we probably don't need to look any farther than natural gas to see that. Last time I looked at it, it's $2.70. Yeah, did we have a nice little run last year? I think the answer is yes. And probably the best thing for a low price in natural gas, as is in gold, is a low price. And we'll see just how many people get out of the business, the marginal producers of gold, natural gas. And maybe it's something that takes all the way through the end of the summer as less people basically pump more crude. They're going to basically cap off the wells. They'll have less natural gas. And, you know, basically you'll get down to some kind of level, and then normally something or an event will happen, and things will churn the test of time. I do not like that if you are trying to look for higher prices in gold, I do not like the way that the dollar index is looking. To me, it is held solidly in this 94 range. Every time it gets above 95, the government looks like they are getting actively involved in holding it down. Every time it gets down to 94, you see a lot of people rush back in. You could probably make a good case that that is European money trying to exit stage left before the lights go off in the theater of the euro. And even today, more kabuki theater in that. The Greeks basically said, hey, we'll sign up for another 6 months. And the Germans basically said, you know, 80% of this money is coming from us. We like to talk about the Eurozone as a big deal, but we own 80% of everything. Let's just make it clear. We lost the war, and we own everything, darn near. We own more than 3/4. We own, what is it, 80% would be 16/20ths or 8/10ths. We just about own everything. We got busy. We have a lot of natural resources, and especially if you've ever been to Germany or even see just the ads about the Danube and the other rivers that run. German area, very industrial, like all the way up to the Great Lakes, in that, you know, they had the bases of huge industrial production. And they didn't lose that in the war. They lost the production facilities, but not that river, not a lot of the other things that made them great at building war materials in World War II. They just changed to building cars and heavy machinery and precise machinery. Today, if we want to build a nuclear reactor here in the United States, the turbine is going to come from the Germans. They've got a lot of stuff. If it's machining or if it has to be a very tight tolerance kind of product, they still have some of the best engineers that you can find for building and machining any kind of high-tech metal product, stainless steel, that kind of stuff. And it just continues on. But as we look at a market that's really not moving in the equities, it's natural to take a look and see what's moving or not moving in commodities. But I think we could probably see a little bit of movement back up in crude, probably into the weekend, and then watch for them to sell it again on Monday. Establishing crude as kind of the go-to thing. I guess the idea is that if anything blows up in the Mideast, you probably want to own crude. That more and more people are thinking and looking at the dollar and thinking, well, what is the chance of this thing actually headed back down? And it is really starting to lose the volatility. And you basically see under that $94 level on the dollar index, it pretty much hits that 93 area, 93.80 area, and you start seeing a bunch of people get on the ball and get it back over 94. 93.83 was the low out there today. And I think maybe there's enough effort from world governments and treasuries to slow down the move, and maybe this last $3 or $4 higher in the dollar happens a lot slower than we saw the move from 80 to, well, when we hit almost 96 on the dollar index. But I do digress. And of course, normally we don't spend this much time on markets before we get into history, but we will today. Volume just a little over 2 billion shares, so volume is light, but not surprising. I think a lot of people are still waiting for the meeting that will happen tomorrow, and I think the last meeting that they had was over in 30 or 45 minutes. I don't think this is going to drag on all day. We're going to probably get to the point tomorrow where the Germans say, we're paying 80% of this, we get 80% of the votes. And that would be it. But what can you say? Anyway, it is probably a little bit of time for history.
And it's all just a little bit of history repeating.
And as we do every day, we like to talk a little bit about history. On this day in 1878, Thomas Edison receives a patent for his tinfoil talking phonograph, ancestor of the modern record player and the first device to make sound recording practical. Of course, he moved on within just a couple of years to a wax cylinder and later on to, of course, vinyl records. I think that was 1915, 1910. Went to vinyl records, maybe even a little earlier than that. I think it was, they may even have been Bakelite before vinyl, but whenever vinyl became available, they moved to that. Edison it was very much kind of a Steve Jobs kind of guy. In fact, Steve Jobs did a lot of work on what Edison did. Edison was not the nicest or kindest man. And maybe you could say if Asperger's is actually a real thing, I'm kind of decided on whether people are just absolute jerks and sociopaths or if there's actually something called Asperger's. But he certainly would have qualified it if it is a real thing. Pretty horrible individual. Was one of these guys that once he made it, decided that everybody else was little people pretty much to be trampled on at any time he could. His big friends were, of course, all the other big titans of steel and railroads. He did have his winter place just south of Tampa here. I've been to it several times. Very nice place. You can make a pretty good case, though, that he stole, after his pretty much first couple of inventions, pretty much stole everything else and made it his. And I think you can see a great deal of parallels between him and Steve Jobs in that they didn't have any problem appropriating anybody else's ideas. Steve Jobs was famous of taking ideas of his underlings and putting his name on it and getting a patent under his name. He understood the true miracle of basically disinformation and kind of propaganda. He was not beyond it. But in the end, he basically stole the wrong patent, went ahead with it, and found out that he made a powerful enemy that led to at least his downfall in power generation by screwing over Mr. Tesla. And Tesla ended up giving his patent to Westinghouse just to screw over Edison, and he did. And a lot of interesting things, but Edison would pay off reporters rather famously to say that if someone was getting electrocuted, to change electrocution to being Westinghoused, because of course his chief rival was Westinghouse. And it was kind of interesting, but he would electrocute dogs and elephants in the street. He would do anything. A 100% capitalist, but Asperger's are worse. We'll be back in a minute, finish up. We got a lot of stocks to talk about, so we will do that. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, that's pretty much it for the news. We're going to get right into stock charts out here and some of the stuff that is moving. And let me update this here and take a quick look. Solar City came out with earnings, and they were not happy times, as they like to say. Down a little bit, not the end of the world. Nice little doji out here. But I get a lot of flack from people in the Tiger's Den, mostly because they like the idea of solar energy and solar power. The reality is far from that. And what doesn't matter whether, well, at least in the mid 2005, 2008 level or area, I'm going to say 2005, we had a huge move up in fuel cell companies, mostly because at that time the Republicans were getting a bunch of cash from those folks, so they were pushing it and they were in power. When President Obama won and they came in, of course, they brought in all the solar cell guys. And, of course, there was huge amounts of money to be had for those politicians, too. So, of course, those guys that made the solar cells were pushed out because they were the enemy and were replaced with the solar cell folks. I suspect the same thing's going to happen again in the next big change. I don't think that there's a chance a snowball's chance in hell, as they like to say, that any of these subsidies that are both subsidies to the solar cell industry and, of course, kickbacks and political contributions are going to come back anytime soon with the Republican Congress. I don't think there's any way it's getting through the Congress, basically what I'm saying. So we may be at this kind of loggerheads for the next few years where neither one of these technologies really gets pushed through Congress and gets more subsidies for a product that still is not cost efficient. But I've been saying for a long time that the end of the subsidies would be problematic for Solar City. And if you watch what was happening during the earnings call for Solar City, basically the CEO said, well, you know what? We're not going to be having any more real subsidies being renewed anytime soon. So we're probably, you know, if we can't find a way to make money in the next couple of years, we could go bust fairly quickly. Of course, this is one of the darlings of Wall Street in the fact that it loses huge amounts of money, other than the fact that government gives them lots of cash. And I know people will make the argument that, of course, that we subsidize farmers and all that. And so what? We can take the subsidies away from them, too. It's always a political calculation. But to me, I would much rather see the government spend all this money in research and development for something that would truly compete, instead of just trying to figure out if we can get it into the market long enough, maybe we can find a way to make it compete. I think that's probably a very poor use of taxpayer funds, let me put it that way, whether it is fuel cells, which we don't see every day, and or solar cells, which we're not going to see every day until they radically figure a way to store energy that doesn't include a battery. Because no matter what you do and no matter what Mr. Musk says, batteries, the anodes and cathodes will sulfate and eventually fail. If they didn't, you'd never have to replace the battery in your car. And I'll guarantee you in 5 years from now, if you still have a gasoline engine car, you'll be replacing the battery every 3 or 4 years. It just, you know, maybe it's better. Maybe it's 6 years. But basically, if you're throwing half away of the part of the product every 6 years, going to be very hard to ever make it cost competitive. The other thing that I bring up regularly, of course, is the wonderful economy or economist piece that basically shows how ludicrously expensive this stuff is when you figure out that you're actually paying for it twice. Their example was, I'm going to sell you a car that runs on solar cells, but you're going to have to own yet a second car powered by gasoline to run every time the sun's not out. So I'm going to make you buy 2 cars. And short of maybe saving a little money on gas, you're going to pay for it twice. And of course, the economist piece was saying, for electrical production, it doesn't make much sense because you're paying for it twice, or you're making your neighbor pay for it. And of course, the politicians got their greedy little hands out on all these kind of things anyway. But that doesn't matter. Anyway, down about half, looks to me like it's back in our trading range, back down to 45.91. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we've got some questions out here. And, of course, you can always email me at path@tfnn.com. That's PATH at TFNN.com. You can call me at 877-927-6648, or you can post a message in the den, which someone has done. And as long as we're talking about Solar City and batteries, the question came up, what is this new silicon battery technology? Batteries are chemical reactions, and with any chemical reaction, there's not 100% efficiency. The idea is that there's a cathode and an anode in a battery. The electricity or electrons flow from where there's a supply, excess supply of electrons to where there is a negative supply of electrons. Where those connections are made are called the anode and the cathode. If you look at a battery and it shows plus and minus on it, like your little AA batteries when you look at it, you would think that, of course, electrons flow from the positive to the negative. Well, it's just the opposite. The problem was that it came up with Benjamin Franklin, and, of course, he got it wrong, and by the time that anybody figured it out, it stuck. So electrons actually move from the negative to the positive, or in that direction. They also move in a copper wire slower than a snail. Most people don't know that, but the effect is found almost instantaneously. But the question is, what is the cathode and anode made out of? And in the case of silicon batteries, they're using basically silicon to use it. The whole idea about designing cathodes and anodes is because I spent a huge amount of a fortune trying to come up with a way of making a big battery in a company I was involved in. And basically came to find out that it is incredibly difficult to not have the anode and cathode sulfate, i.e. chemicals finally build up on them so thick that the battery doesn't work anymore. That's the same problem you have in your automobile every 3 or 4 years. Basically, it gets coated by the byproducts of the conversion from chemical to electricity, and they slowly build up and mean that it doesn't work anymore. The idea is that if you use silicon, maybe they should be better than lithium, and the byproducts will be less, and of course the buildup less, and maybe you'll actually have some properties that change. The problem is with silicon batteries, at least up to this date, we might find out that this has changed. They have not been able to charge them very fast. So if you can spend a long time waiting to charge them, that may be a better deal. Now, as far as I know, no one's seen these silicon batteries out in the wild and whether they'll truly work. But every time you change the chemistry, you change the way that the battery acts. The amount of power that comes out per cell. If you get like a AA battery, it's 1.5 volts per cell. By changing that from silicon from lithium, you may go from, I think lithium's 1.65 in most cells, or 1.8 volts per cell. You change the power, or you literally change the voltage coming it out by changing the anode and the cathode. You change how fast it both charges and discharges, how fast you can get energy in and out of it. And of course, there's a lot to do now with electronic controls on how you recharge it, how fast you can recharge it, do you overheat it, and things like that. So the problem is it's always a chemical reaction. It's hard to tell when those chemical reactions change. You can write software to try to emulate it as best as possible. And to this point, Tesla, the car company, claim to fame is their ability to recharge the batteries as good as they can, or better than everybody else. Maybe that's the best way to say it. So when we look at Tesla, they've made a very good car, and some people think excellent. The car is wonderful. The problem is, it always does come back down to, can someone else do it, and does it make economic sense? And the electric car was actually the first car. It came out 10 years before the first internal combustion engine car. And guess what? It's been tried 20 times in between. In fact, there's a great documentary, I think it's still on Netflix, about electric cars. And it goes through, I think, 1998 or 99 when it came out. And then it came back again about 2008 or 2009 with a update to that documentary. And that is about the problems that have always continued with electronic cars, which is how do you get the power density to equal anything approaching what a gasoline car will do, i.e. can you get 400 or 500 miles out of it? And the answer has not been a resounding yes. The batteries may be better, but if they don't get incredibly cheap, it doesn't matter. Tesla, the car company, is thinking if they build their $5 billion plant to build the batteries, they can get the cost down in the batteries. Unfortunately, chemical supplies and designs of batteries don't lend itself like electronics to doubling every 18 months and dropping in price by half. And that's the problem. I think that the answer will eventually be, of course, an electronic version of energy storage instead of a chemical one. And hopefully that answers the question, that it's all about all those guys. Yeah, there's a lot of talk this week about A123, which is suing, I think it's suing Apple and Tesla for various patent infringement stuff this week. But A lot of big pushes out there, and of course, some very big promises by Musk on Tesla and Solar City that are tough. But it is interesting. And I see Andy Heck is typing. He'll be coming up here in a couple hours. And Basil Chapman also talking about, he's got a webinar tonight also about parallels to 1929. I'd like him to do one on the parallels between now and 1938 because a lot of people, 1938, were kind of denying that the Nazis were a problem. I noticed that we've got a lot of debate today on whether or not we've got terrorism is a problem or if it's something we can just do the ostrich on and stick our head in the sand and they'll go away. I don't believe we will, but at least our government is on the ostrich path of the last few days. Good discussion anyway. Solar City anyway, back down. Let's take a look at some of these gold companies. We have some people wanting to look at these. And like I said, it's finally getting to the point now where these things are starting to get interesting. Barrick Gold came out with earnings a little bit better than a lot of people thought, a little bit more juice out here, a little better move. Looks like it's going to go out here and try to hit the January 27th high, $13.25. Energy could be a little better, but we'll have to see how this day closes out. Of course, Gold Corp, another one. Its earnings not so good. It's got some, basically some decent volume out here. You're going to see how this thing closes out the day. It's back into the big volume up day that it had on the 15th of January. That day you had 24 million shares. You got 11 million shares today. So certainly these things are acting better. Could I see, some sideways actions on these? I could. Am I buying them? The answer is no. But I'm looking for even better prices and maybe a push down next week in gold. And I would love it to see it test that 1183 and have absolutely no volume where I could go start putting my finger in the water on buying gold. But right now, I don't see anything out here. And with the dollar index, I'm thinking going to 98, still problematic out here. Let's see what else. Did we get any email yet? Gonna check it real quick. Nothing at the moment. So let me get back to this. Take a quick look at we're under 18,000 on the Dow. I don't think that really means all that much. More interested in the movement, down 2 points on the S&P cash, 2.23 billion shares, so not a lot happening out there. So let's get back to some of the more interesting stocks out here. Find my notes. I've got to scroll up and down. I got this one. I almost forgot. Where is that out here? I put it in here. Here it is. We got this ready to go.
You mean spam?
Wonderful spam. And I bet old Andy Heck would love this because we're talking Hormel Foods out here. It is a nice pop up here. We got higher volume in Hormel, but it certainly looks like a breakout. And what is it? HRL, where are my notes here? I got to go up and down. Beat Q1 consensus EPSs by a nickel, missed on revenues, but raised its EPS guidance. So spam and pork looking good. Of course, the price on those has fallen dramatically as Andy Heck, our chief authority on farm animals at TFNN, has brought up so many times. But nice, solid break with volume above the previous high of $55.40, 1.1 million shares. And we've got 1.3 million now. So I think you're going to have a pretty good look at this thing. Let me go back and see if there's anything else. Just a solid move up. And I guess, especially after the Chinese bought Smith Foods, was it Smith Foods last year? That it would be very interesting to see out here that maybe the people think that this is a buyout candidate, but good on earnings, good on the earnings call, and that's pretty much everything else. What do we have? TX. Take a quick look at that. real quick. Nothing out there. LH show. See, I had some out here I wanted to look at. TRN, NBL, HST. Did we talk about that one yet? I don't think we did. Host hotels and resorts. A lot of these guys are giving kind of negative guidance on the stronger dollar, as they're not expecting as many people from Europe to come over here next year. Most of the people in Europe buy their tickets and their packages for hotels early. They did so before the last huge move up in the dollar. But, of course, next year that's not going to change. They're going to have to buy at the more advanced prices because of the strength in the dollar. And basically the CEOs are talking about it. But Host Hotels and Resort is doing that. That beat Q4 consensus, of course, but guided below consensus because of the dollar. And as long as the dollar is higher, probably not going to get back up to that level. Down on high volume, probably moving back down to this $19.94 low from the October 15th plunge down there, but high volume, 18 million shares. So we're looking at that getting tested fairly soon. And let's see, what else do we have out here? We got movers. Let's talk about some of the other ones. Wanted to see how some of these other companies. Got a question. Was that Firesign Theater or the Pythons? Apparently you don't know your Python lore, or you would know spam. Monty Python's spam, spam, spam. Egg, cheese, and spam. Adobe Systems is one of these up here. Very light volume, challenging a previous spike high, 12 million shares. So I'm kind of watching this and see how it handles itself. My guess is it probably is back to $75 for expiration, or tries to move that way tomorrow. But unless we get some news. December 12th, this thing spiked up on earnings, $77.56, 12 million shares. Pulled back to $69.98 on January 14th. Came back up. The energy is good. I wouldn't say it's fantastic. But what you really want to look at is it got back into that big candle of December 12th, that it had 3.8 million shares on the 13th. On the 17th, we had almost 2 million shares, and we have 17 million shares yesterday and about a million so far today. So my guess is we're probably going to get a little pullback. I would not be surprised to see this thing pull back to $75 tomorrow. You see some bad news. This may be one that you want to look at for just a quick one-day trade. Not saying that there's anything more there. But at the moment, it doesn't look like it's ready to take out its highs. Another one that's up here on very light volume is Amerisort Bergen Corporation, ABC. The January 28th high had $100.20 on it. 5.4 million shares, very, very light volume, really tailing off the last few days up here, but still hanging around 863,000 shares today. But again, it's going up against that January 28th high with 5.4 million shares. If you were thinking this thing was a parabolic move and was going to fail, what you would want it to do is close below the 3x3 displaced moving average. That's not much under what we've got out here. It's closed below it. It closed above it. The next signal underneath this, if it did do it, would be the sell signal and maybe a possible short. All the way back down to 80, where this thing started with a huge sign of strength on the 30th of November. Anyway, we'll be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as always, you can call me at 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den. And hopefully I answered the question about batteries. Of course, I'm always being accused of someone asking me what time it is, and I tell them how to build a watch. But what else can you say? Looking at Netflix, I think it's getting very interesting up here in that it's back up into its highs of September 9th, 489.29 on September 9th, 2.8 million shares. When we look at the volume just the last few days out here, 1.8 million shares, 1.5 million shares, 1.4 million shares, 1.2 million, 1.3 million shares today, and be making a kind of interesting candle. Of course, they had some fairly good outlook on what's going on out there. I'm going to have probably a little bit of discussion about Amazon's foray. And if you caught, what was it, last week, a couple weeks ago, on the Tom O'Brien Show when we were doing the Tech Insider Hour, I was saying how Amazon is actually streaming more video than Netflix right now. Actually, more people are watching some show on a daily basis from Amazon than Netflix. So they are not the all-time leader. Netflix certainly is doing a better job of getting into foreign markets right now. That should be costing a little bit. The question is just whether or not they can continue to hold these kind of margins. I have to say that I'm a little disappointed in the stuff that Netflix has had for the last 2 or 3 months. Not a lot of movies I wanted to watch. I've got Amazon Prime. There's some interesting things out there. But to tell you the truth, more of the stuff that I'm starting to look at that isn't documentaries or movies, a lot of stuff showing up on YouTube. So even those guys look like they're maybe doing a little bit better. Huge and massive energy to the top side. I'm not denying that on Netflix, but the question is what happens when it gets to $498.29, which is about $8 higher. And I think we're probably going to see that probably tomorrow if we get any kind of decent news out of Greece. I don't think that news will last, but I think it will last good enough for them to try to jam this market up tomorrow. And there's probably a good opportunity, but I think we're going to start getting some signals on that then. Other stocks of interest out here, Paul, P-A-L-L Corporation. Its symbol is PLL. Another one up here that's been up at fairly high levels. The January 9th high was 103.29, was 640,000 shares. We've been doing 300,000 shares and 200,000 shares today. As it has gone over that previous high, does look like it's going to probably hold it into the closeout here. But there's some stocks up here that where the air is getting mighty thin. There's a handful of them here, and I'm kind of looking at these as the canaries in the coal mine. Can these things hold up at these highs? Or are they just in a higher trading range? And we're going to see. But I think we're going to probably have some real action tomorrow. Been thinking about buying some calls tomorrow or before the close today. I may put that off till the morning. I'm not seeing a lot of stuff really line up. I didn't get the pullback to crush some of the calls I wanted to buy. So I may have to wait till tomorrow morning. Normally, they'll try to wipe out as much of the premium as they can before 11:30, in which case, if we get a nice little short squeeze in some of these, might be some great white lightning before the end of the day in the options market. At least that's what I'm looking at now. Pretty much all cash until then. See you tomorrow. Same bat channel, same bat time. So when you can, not when you have to. And hang on for the Tom O'Brien Show over most of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.